What's going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Yes, I did some partying these past 2 days. Getting my official licensure in the state of Ohio as a nurse practitioner. So just want to make it clear, I am a nurse practitioner officially in the state of Ohio. And then my friend surprised me with some shots of tequila last night. So you know what? I said I'm going to enjoy these next 2 days. And then Saturday, I'm going to be partying at Ohio State when they play Nebraska. But I wanted to make something clear. I needed a little bit of a oomph with my dividend portfolio. Something to turbocharge it. Something to affect not only my eTrade dividend portfolio, but my M1 finance dividend portfolio at the same time. So my estimated income on eTrade skyrocketed, okay? Estimated income, $7,373. That's way up there. And I'm going to explain to you what I did. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out my dividend portfolio strategy right now. So first, I'm going to explain my rationales. So if you watch my previous video, what I was telling you about KeyCorp, okay, I ended up selling them. And there's a few things that irked me, but yes, I will be rebuying KeyCorp. Sold it for a profit, but I needed something a little bit of a oomph. Like I said, with my dividend portfolio on eTrade and getting $400 a year, pretty much, is not going to cut it when I can get something to turbocharge it and put that income into M1 Finance and then have M1 Finance buy my dividend growth stocks. So KeyCorp right now, it's 1705. Now, I love KeyCorp. So don't get me wrong. I really love KeyCorp. I'm going to be rebuying them. I mean, the dividend yield is 4.82%. The year range was 977 to 1794. Its day range was 1699 to 1745. Previous close was 1723. So I'm going to explain my rationales why I sold them and probably will be rebuying them eventually. I just want to go over this. A few things. They've been a little bit down, but I think when the market gets better and interest rates start getting fixed, it'll be better. But the revenue's gone down December 2023 by 12.12%. That's quarterly. And then March 2024, it went down to 9.38%. June, it went down to 0.42%. So you're seeing a recovery. But September, it went down 60.19% revenue with quarterly financials. Net income was negative 4.10 million. Now, again, this is according to Google, and it was down 235.31%. Diluted earnings per share was negative 47. It was down 262.027%. Net profit margin was 679.73%. So that was way down 439.98. But I like this as a regional bank, and it has a lot of subsidiaries, and it's huge. I mean, regionally, it's a big company. And I'm going to tell you, it has a lot of banks like across the country. I mean, this is still a turn on, but this being down a little bit and with the dividend growth, which I'll jump to, a little slow right now. So look at this, 2017, 9 cents, 10 cents, 2018, 11 cents, 2018, 12 cents, and then 17 cents in 2019. And then in 2020, 19 cents, a little stagnant during the pandemic. Then in 2021, 20 cents, 2022, 21 cents, and it was a little stagnant at 21 cents. So again, the payout ratio according to Zacks is a little high. The dividend increases in the last 5 years is 2. Dividend growth in 5 years is 3.01%. So if you bought one share, you made 82 cents with a 4.76% dividend yield. So I said to myself, I have 400 plus shares. What would I do with KeyCorp? And again, KeyCorp, I'm pretty sure, is an SCHD. KeyCorp still is not a bad regional bank. I like regional banks for my dividend portfolio. I have a lot of regional banks, but not right now. Will KeyCorp be a buy in the future? I would think so, but I'm going to tell you I took a risk, and this one, I would say the risk is extremely high selling KeyCorp for this next move that I had to get my dividend portfolio up there. I would not do this. I'm telling you right now, I myself, I can take a hit. I've lost with that BRICS REIT because of the pandemic, the student loan housing REIT. I mean, it was doing amazing when it started. I mean, it was just expanding. It'd probably be public right now, but then it was destroyed and obliterated because of the pandemic. And who's going to live in that house? Who's going to pay rent? You know, that's what happened. So I lost 6K in it. That wasn't a big deal. This one, even 8K, it's still not going to be a big deal to me. But I'm going to show you the risks that I did because I'm well diversified. And I can do that being single, no kids, and I'm a travel nurse right now. So let me show you what I did. I threw that money from KeyCorp into NVDY on here. And the funny thing is, it's one of the only ones that are positive right now. But we have to really think about that with this decision that I made. Is it risky? Yes. I mean, look at the business development companies, Horizon Technology Finance. I'm down 430. Again, this is one portfolio that I can mess around with and still, not going to freak out about. Because I go for high yield, it's a risk. Arbor Realty Trust, I'm up 10.29%. I'm up 1,038. But look at this, NVDY, 324 shares. So what I'm going to do is I'll show you the income of NVDY is going to be reinvested in my M1 Finance dividend portfolio. So the money that I earn from NVDY on eTrade is going to go to my M1 Finance dividend portfolio because I did discuss that strategy a year ago, what I plan on doing. And this is what I'm going to do. That way, I can turbocharge this dividend portfolio with the income from eTrade. And again, I said before, I have a goal with 200 shares of Realty Income. Use that passive income with EPR properties, use that passive income with gain, use that passive income with Horizon Technology Finance, reinvest all of that passive income into Realty Income, and then reinvest the dividends with Realty Income. That way I can turbocharge it. I can also, if I really wanted to, use the passive income with NVDY and throw it into Realty Income. So this is a really good headache to have right now, and I'm going to do that with NVDY, build up this one on here with the passive income from NVDY on there, and then see what happens. That way, the expense ratio, blah, 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 that'll cover it. I have, I can flip the income of NVDY on eTrade, maybe throw it in Agree Realty Corporation. I told you I'm going to get Agree Realty Corporation on eTrade. Probably when I get to 200 shares of Realty Income, then I'll go jump to Agree Realty Corporation. I can use the income from NVDY. And also, I'm expecting some money, hopefully, back from somebody who fraudulently used my cards for a trademark application and use that money to possibly load up on MSTY and then use the income in MSTY and my E-Trade to M1 Finance with MSTY, and then use the passive income with NVDY, MSTY to buy the dividend growth stocks. Now, that was a huge strategic move. Now, I'm going to show you how much NVDY usually, now this is not guaranteed. Now, I'm telling you right now, if you did what I'm doing and you're tight on money and you can't really be that risky, okay? Maybe you put money into growth ETF, VOO. I don't really think VOO's that much of a risk. I mean, again, this is not financial advice, but the stock market at S&P 500 is just going to grow. I can use, again, that NVDY money. I can, in the shares and the ETF, because remember, NVDY is not actually shares of NVIDIA. That'd be amazing if I had 300 shares. And if I learn how to master options, which I will soon. First, I need to get a new nurse practitioner job, my first one. But in the comment section, in the description of this video, my buddy Business Famous has a really good description. He has it on Gumroad, how to sell puts and sell cover calls to turbocharge your dividend portfolio. So I'm going to start reading that and mastering it. And you can check it out too. I'm good buddies with them. Check that out. But that's what I am looking at doing. So I wanted to be clear. That's what I plan on doing. So let me just jump to my portfolio estimated income real quick. So right now it's paid $14,317.12 this year. Pending income is $162.53. Estimated income is $2,196. Again, it's estimated, not going to happen. It's estimated. So that way I can use that money, NVDY, to start buying dividend growth stocks. And I'm going to show you these next 2 months a little bit of a touch up that I'm having to get a little bit of a boost for my dividend portfolio with monthly passive income. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Again, risky, very risky. Probably 90% of you, it's not a good idea to do what I'm doing. Maybe even higher than that. Me, I can take the hit. Many of you can't. So just be clear of that. This is a huge risk. NVDY can go to zero. It's not going to affect me. Sure, my net worth is increasing. It's doing very well. I'm student loan debt free. Okay, I'm in an apartment. I mean, they literally just fixed my toilet. I had to get a new one, and there's probably a reason why I invest in REITs, because if I'm an individual landlord, I'd have to fix toilets. I don't want to do that. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow while I'm partying at Ohio State when they play Nebraska. Take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Yes, I do invest in NVDY. I cannot confirm if I'm long with NVDY, and as you know, investing, there's a risk. So you have to do your due diligence, and you need to go see a financial advisor or a tax advisor if you're looking for financial advice or tax advice. My YouTube channel, again, is entertainment purposes only. This is risky. You don't have to do what I'm doing. You don't have to buy NVDY because I buy NVDY. I am telling you straight up. I'm not one of those guys that pumps stocks. I'm not Jeremy from Financial Education that's a goofball, okay, because, with his tattoo chef and stuff getting ripped on by Paul Gabriel, which I'll be meeting up with Paul Gabriel soon with Everything Money because he lives very close to, by me. But I like to be straight up and just show you this is my investing journey. So some of my mistakes you can notice, okay, for what I'm doing, but this is my own investing journey. So I just want to be clear to you. This is me. This is my strategy. There are some strategies I will tell you, not a good idea. I wouldn't do it, if I was in your shoes. This one, I wouldn't, just because it's very risky. Okay? So you guys take care and have a good one.